Right now, the New Zealand dollar is pinned just above the mid 0.5700s against the US dollar, and it simply cannot break free. That might sound like a small technical detail, but for a currency that was trading closer to 0.60 earlier this year, this is a meaningful slide. Every time NZD/USD tries to push higher this week, it gets sold straight back down. Why? Because the US dollar has turned firm across the board today, Tuesday the 28th of July, 2026, with traders bracing for the outcome of the Federal Reserve's FOMC meeting, which concludes tomorrow. When the world's most important central bank is about to speak, capital tends to flow into the safety of the greenback, and smaller, commodity-linked currencies like the Kiwi dollar are usually the first to feel the squeeze. The US dollar index has been climbing steadily into this week's Federal Reserve meeting, and there are clear reasons behind it. Traders widely expect the Fed to hold its benchmark interest rate steady at this meeting, but the real focus is on the tone of tomorrow's statement and Jerome Powell's press conference. If the Fed signals it's in no rush to cut rates later this year, that keeps US Treasury yields attractive, and money continues flowing into dollar-denominated assets. Recent US economic data, including resilient consumer spending and a labor market that hasn't cracked despite months of elevated borrowing costs, has reinforced the idea that the Fed can afford to stay patient. That patience is exactly what's keeping the dollar bid and keeping pressure on pairs like NZD/USD. It isn't just about the dollar side of the equation. The Reserve Bank of New Zealand has its own reasons for keeping the Kiwi under pressure. New Zealand's economy has been growing at a much slower pace than the US, and inflation there has cooled enough that markets are pricing in the possibility of further Rbnz rate cuts before the end of the year. Lower interest rate expectations at home make the New Zealand dollar less attractive to yield-seeking investors compared with the US, where rates remain higher for longer. That widening gap between what the Rbnz and the Fed are expected to do is a direct driver of NZD/USD's struggle to hold above the mid 0.5700s today. On the charts, mid 0.5700s has become a key battleground. Bulls need a decisive close back above this zone to ease the immediate downside pressure, but every rally has so far run into selling. Below current levels, traders are watching the low 0.5700s and then the psychologically important 0.5650 mark as the next line of defense. On the upside, resistance sits around the 0.5750 to 0.5780 region, a zone the pair has failed to clear on multiple attempts over the past sessions. Until NZD/USD can close convincingly above that band, the broader bias remains tilted to the downside, especially with such a major event risk sitting on tomorrow's calendar. This isn't just an abstract number on a screen, it has real consequences today. A weaker New Zealand dollar makes imported goods, from fuel to electronics to machinery, more expensive for Kiwi businesses and households. On the flip side, it's good news for New Zealand exporters selling into the US market, since their goods become relatively cheaper and more competitive. For New Zealanders planning travel to the United States, a dollar sitting near mid 0.5700s means your money simply doesn't stretch as far as it did when the pair was closer to 0.60 earlier this year. Businesses that import raw materials priced in US dollars are also watching these levels closely, since even small moves can affect margins. The New Zealand dollar is often described as a commodity currency, and that's because its fortunes are closely tied to global dairy prices and broader risk appetite. Recent softness in global dairy auction results has removed one potential source of support for the Kiwi. At the same time, cautious sentiment across global equity markets ahead of the Fed decision has encouraged investors to trim riskier currency positions, and NZD/USD is often one of the first pairs to be sold when that kind of defensive mood takes hold. Put simply, when investors get nervous about what a central bank might say, the Kiwi dollar tends to be one of the currencies that suffers most. The next major catalyst for NZD/USD is tomorrow's Federal Reserve decision. If Powell strikes a hawkish tone, emphasizing that rate cuts are still some way off, expect the US dollar to extend its firm run and NZD/USD to test that low 0.5700s support zone, potentially opening the door towards 0.5650. However, if the Fed sounds more open to cutting rates later this year, or if upcoming U.S. economic data starts to soften, the dollar could lose some of its shine, giving the Kiwi room to recover back toward that 0.5750 to 0.5780 resistance band. Beyond the Fed, traders will also be watching for any fresh signals from the Reserve Bank of New Zealand ahead of its next policy meeting, since any hint of further easing would add yet another headwind for the currency. So here's the takeaway: the New Zealand dollar's struggle above mid-0.5700s today is really a story about two central banks moving in different directions, a Federal Reserve that's staying patient and firm, and a Reserve Bank of New Zealand that may need to cut further as its economy cools. Until tomorrow's FOMC decision lands, expect NZD/USD to stay choppy and range-bound, with the mid-0.5700s zone acting as a tug-of-war line between buyers and sellers. Whether you're a trader, an exporter, or simply planning a trip abroad, keep a close eye on Wednesday's Fed statement, because it could be the single biggest driver of where the Kiwi dollar heads next. Thanks for watching, and make sure you're subscribed so you don't miss our full breakdown once the Fed decision drops.